a huge shoe, not big, but huge shoe is going to drop in the US economy coming up here very soon. Hey, everybody, you're watching Bull Boom Bear Bust. My name is JJ, back with another dose of economic reality. I've got my blue blockers on today, and I apologize about the glare, but I'm having some eye issues, and it's not just the eye issues. Some people say, why can't you just take your glasses off for an hour? Well, I can, but my eyes are already badly irritated. So that's the reason for it. And it's not about my eyes, it's about the news and how you and I are going to prepare for the economic situation that's headed at us here. And it's very near, in my opinion. It's not too much further down the road. Yes, the powers that be, they're going to find new ways to kick the can down the road. In fact, they're creating new road. They're paving new road. And I said this a few videos ago. I think we're off the pavement. I think we're onto a two-track country road trail right now. Not even a country road, a two-track trail out into a field somewhere, entering into the woods. That's how far we've kicked the can down the proverbial road. It's not even a road anymore. But here's what's going on here. Banks may be starting to turn sour on continuing to loan out money. Let's start right here out of this article. And this is out of Money. Auto loan rejection rates are at record high. And then it goes on to talk about how you can improve your odds of approval, which, do you want to get approved right now for an automobile loan at the current prices and at this pivotal point in the U.S. economy? It's a very risky time to be diving into major purchases, in my opinion. Of course, there's some people out there that are making really good money and they're not going to be affected by this. There's cash buyers, people that are just making a lot of income, that really don't have to worry as much. But if you look at most people, close to 70% of the people, skating the financial edge, and they've been doing that for a while. 2020 was a bit of a rescue where instead of record low savings, we saw savings for the average U.S. household spike to all-time highs in 2020, 21, 2022. It started dropping again. Here we are late 2023, and we're back near the all-time lows for the average savings of the U.S. consumer. What are we talking about? We're talking about how much money people have left over at the end of the month after they pay all of their necessities and expenses. Near record lows once again. So this is not good. And what's going to be done to keep this going? Now, if you remember over the past year, I said that the programs that help people, they're going to have to make a comeback to prevent a deflationary economic collapse. And what did we just see here recently? We saw the VA loan protections reintroduced. Right? People thought the protections were being phased out, and they were very slowly. It took 3 years to phase out some of these protections. Look at the student loan protection. That just ended in October. So that should tell you the dire situation for most consumers right now. If we have to have protections 3 years after the health crisis was supposedly the reason why there was economic pain, we have to bring back protections now, right? So we're seeing these things happen. I think auto loan repossessions are going to skyrocket. I think they may introduce some sort of protection for that. If we just saw the article out of Money about how banks are rejecting people now at higher rates. So will we see a big correction in car prices, or will they just pass some rescue program where people cannot get their car repossessed? It's going to be very interesting to keep an eye on it, of course. But take a look at some of these numbers. Listen to this. The rejection rate for auto loans is 11% this year, which is the highest level since the Fed began keeping track, going all the way back to 2013. Rejections are more than double of last year's rate of 5.2. So rejections have doubled in just a year. So this is the beginning, I think, of some big changes in the economy where we could start seeing more deflation, unless, of course, they flip the card table over and change all the rules and reinstate or re-implement these rescue programs that we saw starting in 2020. But the question that we should all be asking is, if there is a fight against inflation, then why are we putting protections in to prevent or avoid deflation? Right? It's very interesting when you look at it. Now, there are consequences to deflation. Usually when deflation happens, a lot of people are losing their cars, they're losing their homes. A lot of people have to file bankruptcy. But see, that's called a correction. There has to be some sort of correction to make up for the problems or to make up for the bubbles and the high cost of living. There has to be a correction. And when a correction happens, there will be pain. There will be people that will be in the line of fire, so to speak. And those people have to pick up the pieces and start again, but at a much lower cost of living. Ask a lot of people that lived through the 2007, 2008 financial crisis. Many of those people lost their homes, but a few years later, they turned around and bought a home for much cheaper because the cost of living came down. Now, it didn't stay down for long because of the rock bottom interest rates, the record money creation, all the money lending rather, and all the new debt created into the economy from all this bank lending. And now here we are again, over 10 years after the financial crisis, and we see all-time debt levels, all-time high, delinquency starting to uptick, right? So we're at the end. The question is, how exactly is it going to play out? No one knows exactly, but we can get a pretty good idea by looking at the news and the trends here. So let's go on to a different item here. Now, we talked about this a couple months ago, how about 10% of companies out there right now are zombie companies, meaning they have to continually borrow more money or roll over debt to continue operations. In other words, they're not making money. They're only able to keep going because of new debt. Well, those days are fading because of the higher rates right now. But imagine if 10% of companies went bankrupt in the next year. What would that look like? How many more people would be unemployed? Or how many more people would have to go out and get a different job? Would it be as good of a paying job after getting laid off? Right? Well, they can put that into the jobs number and paint it as a good thing. They can say, look at all the new jobs. But a lot of the new jobs are people getting laid off and having to go find different jobs. Also, if you know what we talked about in our previous report, a lot of jobs are government jobs. With all this new spending and these spending packages, a lot of new government jobs are being created. But ask yourself, is it a good question when 25% of the jobs being created are government jobs, only made possible by record levels of debt and borrowing at the hest of the U.S. government? Very interesting when you think about it. And we're seeing a pretty big rally happening right now in Wall Street. And remember, I said we would see this. I called it a short squeeze. And I do think it's going to be a temporary surge in the stock market. A lot of it's optimism on no more rate hikes. It's optimism on rate cuts, as many economists and even people from within the Fed are out there predicting that we may see rate cuts as early as March 2024. The question is, what's going to justify the rate cuts? What's going to break in the economy that's going to justify these rate cuts? Will it be more bank failures? Will it be a massive surge in bankruptcies, vehicle repossessions, home repossessions, foreclosures? Who knows exactly what's going to trigger this, but they're going to need some sort of backstory on why they're cutting rates after years of telling us how there was a economic recovery. Remember that? How inflation was easing and how the economy is resilient and the consumer is strong. So if all these things are true, why are we even talking about cutting rates? And to take it a step further, why are we not talking about raising rates more? Because we haven't hit the inflation target that the Fed put out there themselves. It's supposed to be 2%, right? So things don't add up. The stories do not make sense. So we have to try to unravel this, connect the dots, read between the lines or the lies, and try to see what's really happening with the U.S. economy, right? So let's move on here. Something else I wanted to talk about here today. And I wanted to talk about what I noticed when I was out doing some more shopping. And yes, I do shop. I'm not some penny pinching Scrooge, as some people may think. I still shop. We still do the gift exchange thing because we have young kids. I know there's people out there that don't celebrate Christmas. They think the basis of Christmas is based on some false holiday based on the dates that are wrong and stuff like that, the religious component. But we still celebrate just because we think it's fun. We like getting time off of school, time off of work, So to a lot of people, the holidays aren't so much celebrating, um, for religious reasons. It's just the whole days off, time off, spending time with your family, getting together, right? Having more time, more family time. That's what it's about to us. So yes, I was doing some shopping. What I noticed here, and by the way, I shop at discount places. My top places that I shop at, if I had to give you like a top 3 or 4, would be like Ross, TJ Maxx, Burlington Coat Factory, right? Places like that, heavily discounted places, right? Even places like Kohl's is just like way too expensive. Sometimes I will buy something from Kohl's, but I just don't like giving my business to places that overcharge, in my opinion. Overcharge too much. But what I noticed was the prices at these stores actually is a lot cheaper than online, right? There's this whole narrative that people are not shopping in stores because people are just shopping online because it's cheaper. And we did see over Black Friday a lot more sales online versus we did in the store. But when I started looking at the prices and comparing things, and here's just a few things that I found. For example, Burlington Coat Factory, I found some like sweatpants and a couple jackets. And these are items I had on my watch list at a very well known online commerce center. I'll just say what it is, Amazon. And the things in the store were like half price compared to what they're charging on Amazon for the same exact item or very similar items. But in many cases, it was the exact same name brand, the exact size, and everything, color. And I found it for about half price at Burlington. So it looks like there's some price gouging going on with Amazon. And something else I noticed here, I had something on my watch list at Amazon. I believe it was like a flannel shirt, something like that. And I found it somewhere else for cheaper, but the place that had it cheaper didn't give free shipping, right? So when you added it up, it was about the same. So in other words, Amazon offers free shipping, but it looks like to me what they're doing is they're just charging more to begin with to make up for the quote unquote free shipping, right? So you have to look out where you purchase things if you're worried about your budget. You know, there's probably people out there watching this video that don't care. You have so much money that you're not under any sort of budget or financial constraints when it comes to shopping and enjoying yourself. And I know that, and I know there's people in my family that are like that. They'll travel when they want to, they'll buy what they want to, they don't care because they're very successful and financially resilient, like the Fed saying that everybody's resilient. So let's get on to some other news here. I just wanted to dive into my personal shopping experience here and give you my perspective on what another thing I noticed when I was out. Um, there were several kids, and this is like at night because we try to do our shopping at night. When the kids are asleep, we get my sister to come over. She watches the kids, and we go out to shop at night. There's several retailers that are open late, but I noticed at one particular store that kids were running around like crazy, opening packages and being loud and grabbing a football and throwing it across the store. And then the employee comes up and says, "Oh, are you guys gonna buy that if it breaks?" And the parent or parents, but I didn't see any parent nearby to tell the kids to stop doing this. So these kids were like pretty wild, especially for being in a store. They were treating the store basically like a playground. But I'm seeing a lot more of this where kids are just misbehaving in public and the parents don't seem to care. Or if they did care, they're not around to actually witness what these kids are doing. So it's pretty interesting. And these were young kids. We're talking like 7 years old, 8 years old, 9 years old, just running crazy around the store. I mean, have you noticed an increase in misbehaving kids and parents that just don't seem to care? Because I've definitely noticed it. Just another thing I noticed from my recent shopping trip. Now, when it comes to people shopping, there's something called YOLO. That's YOLO. You only live once. And let's bring up this article here out of the BBC talking about how Americans love to spend money. And the title is Why Americans YOLO Spending Spree Baffles Economists. Again, YOLO is you only live once. So basically, just spend money and who cares about the consequences because at the end of the day, you can't take it with you, right? Of course. But you have the get out of jail free card, you have bankruptcy. U.S. shoppers spent a record $9.8 billion online alone on Black Friday. Consumers spent another $12.4 billion on Cyber Monday, an eye-popping 9.6% increase over last year. And as the headline points out, this is baffling economists. So think about this. You have all-time high record levels of debt here in the U.S., combined with interest rates that we haven't seen in decades, but yet you still have record spending. Well, people, one, are spending more and getting less, right? So there's the high cost of living / inflation side of it that you have to look at. It's pretty obvious. Things cost more, so you're obviously going to spend more money. But if prices were only up 3-something%, like we're being told from the official inflation number, we're actually seeing spending up 9.6%. So are things actually only in the 3% range, or are they a lot higher? Are they higher than 9.6%? Many people would argue out there that prices went up a lot higher than 9% over the past year when you look at a lot of things. But what about the items in the store? Well, the items in the store don't seem that expensive to me. In fact, things look a little bit cheaper for a lot of the items that I was looking at. But again, I shop at discount stores and things like that. So let me know what you think down in comments, please. What are you seeing out there? Are things more expensive on the shelves? We're talking about the retail stores, the Walmarts, the Targets, the Rosses, TJ Maxx, Burlington Coat Factory, J.C. Penney, if you can find any J.C. Penney's, Kohl's. What are the other ones? Macy's. Stores like that are going away, and it seems like more discount retailers are popping up. Like TJ Maxx is popping up. Five Below. They've got a new Five Below going into the neighborhood where my mother-in-law lives. This is up in Riverside. A big surge in discount stores from what I see. All right, but more out of this article here. While some of the spending reflects the rising cost of necessities, of course, we just talked about it, Americans are also still buying big ticket items and laying out tons of cash for experiences. The you only live once experience attitude towards money bucks the spending trends of past economic downturns, and some economists have been left scratching their heads, especially as consumer sentiment on the economy remains overwhelmingly pessimistic. So how are we able to still spend this amount of money in America? A lot of it is the banks are not pulling back on their lending. And I said this a couple reports ago, but we have to really talk about this because this is the key to all of this economic activity, or close to all of it. I mean, over 70% of the economic activity is consumer spending. And what enables consumer spending? Well, it's borrowing. So then you have to go all the way back to the banks, the source of this. And people often say, well, they're printing money, they're printing money. It's even worse than that. They don't actually have to print the money anymore. It's just digits on a screen. When people borrow money, that's money that gets put into the economy. When someone gets their credit card limit increased and they go out and spend, that's basically money created out of thin air, but it doesn't have to be printed. So that's why we're seeing inflation so sticky. The more people can borrow money, and it's not all about the U.S. consumer. It's mostly about the consumer. It also has to do with government spending. That gets put into the gross domestic product. And think about it, when the government spends money, let's say the government funds a arsenal of weapons for war. Well, there's certain people out there making a lot of money off of that. You have the defense contractors and the people employed at these places, not just the CEO, but the employees, go out and spend that money that they made through their company, through their income. They spend that into the economy, and that's another way to boost economic activity. So on one hand, you're enriching a certain group or a certain sector, let's say the defense sector, but the people that work at these companies, they go out and spend the money, and that's another way of keeping economic activity boosted, right? So it's not just about the lending, it's about all these spending programs, the money creation, all these things, right, add up. And that's why we're seeing prices remain elevated. So again, we have to go back and ask the question, why are we talking about stopping rate hikes or rate cuts? Why are we talking about rate cuts when inflation's still up? People are still spending money. It looks like to me we need more rate hikes. We need to go to 8% funds rate, 10% funds rate, 12% funds rate. We need a deflationary correction to stop this, because this spending and new records of spending every year can't continue forever. There has to be a correction. The question is, what will trigger the correction? Will it be the consumer finally gets tapped out and you see a massive tsunami of defaults? Or will it be something bigger that pops out of nowhere? Could it be a systemic outage? We're talking about a blackout. There's now 3 countries that have seen blackouts. The latest one came out of Africa. Let me check this real quick here so I get it right. And this was Kenya. Out of Mercury News here, Kenya falls into darkness, the 3rd nationwide power blackout in 3 months. Remember, I also said we're going to start seeing these grid failures, or some are calling this an attack or a hack. Could that be what brings down this entire bull market. It's been a bull market, I mean, for a long, long time. So always be on the lookout for that. I always say, have 30 days cash, food, water, emergency essentials out of the system, ready for something big to break, because it could happen any day. Yes, they are looking for ways to keep kicking this can down the 2-track trail going into the woods now. So be ready for that as well. Inflation, deflation. I try to play both sides because I don't know exactly how it's going to play out. But knowing all this information, rounding all this data up here, and using it to figure out, how we're going to navigate this is, I think, in my opinion, essential. Right. So I'm continuing to invest. I'm not pulling all my money out of the markets. I still have investments out there. I've been talking about those a little more so over the past couple weeks, because people are looking for solutions. They want to know, how to strategize. They don't just want to know the news. They want to know how to react to the news and how to even possibly benefit, right? So that's what we're going to continue to cover, the topics here in this channel, how to benefit from it. I'm still invested, right? So we'll continue to talk about these things and continue to, put the warning out there that this is not sustainable, that something big could likely pop, or a better way of putting it is drop very, very soon. So be ready, and be aware of what's going on. Head on a swivel, eyes in the back of your head, all those good things, everybody. So keep stacking. Thanks for watching this. Big love to everybody. Talk to you very soon now. Bye.